Hello, Sage here. You're watching 𝐊𝐶𝐞 TV live from Sydney, and this is the Stocks in Action show. Let's have a look at the ASX 200 and the ASX listed stocks that are trending today. The S&P ASX 200 is down just 6.40 points today to 7,275.50. The bottom performing stocks in this index are Nuix, down 2.91%, and Collins Foods, down 2.87%. Over the last 5 days, the index has gained 1.86% and is currently 0.55% off its 52-week high. 6 of 11 sectors are higher, along with the S&P ASX 200 index, and A-REIT is the best performing sector, gaining 0.90% and 4.73% for the past 5 days. And on that note, let us now look at a few key global and domestic developments. Japan's economy shrank last quarter less than the first reported, and according to the revised government data released, the gross domestic product contracted an annualised 3.9% from the final quarter of 2020, the Cabinet Office reported on Tuesday. The results beat the median forecast from economists and were stronger than the government's earlier estimate of a 5.1% contraction. The revised figures suggest Japan's economy weathered a winter wave of the coronavirus in better shape than expected, in a show of resilience that eases concerns over the risk of a double-dip recession this quarter amid yet another round of restrictions to contain the virus. And still, the report also gave reason for caution. Consumer spending was even weaker than the first estimated, and much of the overall upward revision was due to the biggest build-up of unsold parts and products since the third quarter of 2017. Shares in the Asia-Pacific nudged higher in Tuesday morning's trade as investors reacted to the release of Japan's revised first quarter gross domestic product figures. A separate report showed wages gained in April from a year earlier at the fastest pace since late 2018 on climbing overtime pay. Let's look at the next news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 𝐌𝐞𝐼𝐴, a veteran and a top-level executive electric vehicle maker Tesla, stepped down overnight, marking the second high-profile exit from the company in less than 2 months. And his exit comes only 3 months after he was appointed the president of its heavy trucking unit of Tesla in March 2020. And prior to this role, Mr. 𝐷𝐷𝐼𝐴 was the head of the company's entire vehicles business for almost 3 years, since 2018. And during his tenure as the president of automotive, the company opened its first plant overseas in Shanghai, and the electric making vehicle company also expanded its battery cell supply partnerships under his leadership. He has worked at the company in various roles for over 10 years since November 2010, reporting directly to the CEO himself, Elon Musk. In its December 2020 earnings presentation, the company had said the semi program was still in development, while committing those deliveries would begin in 2021. However, in the annual financial filing for 2020, the company did not reiterate this deadline. And earlier on April 21st, the company's Vice President of Legal, Al Prescott, had quit to join Luminar, a light detection and ranging or LiDAR startup. And now let's move on to the next news. The US Justice Department has recovered most of the Bitcoin ransom paid by the chief executive of Colonial Pipeline to cyber attackers who hacked the overall system of the US fuel pipeline, creating the most disruptive US cyber attack on record. Investigators have seized about 63.7 Bitcoins, which are nearly valued at $2.3 million after the last month's hack on the Colonial Pipeline that choked US East Coast fuel supply. The delivery of fuel from 8,850-kilometre pipeline was halted for several days in May, preventing millions of barrels of jet fuel, diesel and gasoline from Gulf Coast to East Coast. And the supply disruptions caused after the cyber attack had created a gasoline supply deficit across the country and ignited panic buying, raising prices to record high levels. And we'll just take a short break, but please stay tuned for more of the news. I'll be back in just a moment.
Zealand is unique, and 𝐊𝐿𝐴N TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐊𝐿𝐴N TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐊𝐿𝐴N.co.nz.
Hi, welcome back. I'm Sage and you are watching 𝐊𝐿𝐴N TV live from Sydney, and this is the Stocks in Action show. Let's have a look at some major news from the ASX listed companies from across the sectors. Starting with the first news in, Superloop has announced it will acquire Exetel, Australia's largest independent internet service provider, for $110 million, comprising of $100 million in cash and $10 million in Superloop shares. The acquisition is estimated to have cost synergies of $5 million annually, related to the increased Superloop network utilisation, with all synergies expected to be realised within the first 12 months. Superloop said the transaction would be materially accretive to key financial metrics, including EPS, EBITDA and FCF on a financial year 21 pro forma basis. And the acquisition will be funded by a fully underwritten institutional placement of $49 million and a pro rata accelerated non-renounceable entitlement offer of $51 million to raise gross proceeds of $100 million. The chief executive, Paul Tyler, said that the acquisition of Exetel adds significant scale to grow profitable shares of our three customer segments. He further added that integration of Exetel into Superloop's existing networks is expected to bring super fast, super easy and super reliable connectivity to 3 times more homes and businesses. The company adjusted its 2021 financial year EBITDA guidance at a tightened range of $18 million to $18.5 million, excluding one-off transaction costs. That is at the lower end of its previous guidance of between $18 to $20 million. Let's move on again. Universal Biosensors Inc has recently made the first sales of its Sensure device and free SO2 test strips to companies operating in France, Italy, Germany, Spain, Portugal and Switzerland. UBI is selling Sensure devices and strips to Viventions SA, which operates across Europe, and Viventions will initially market and trial Sensure in France and Italy, while in Spain and Portugal, UBI have made first sales to AZ3OENOSL and Elogia Viva. In Switzerland, UBI has made the first sales with 𝐬𝐥𝐸, 𝐕𝐚𝐿𝐿𝐺𝐸, SAL, and the distribution agreement is for 3 years. And meanwhile, this ASX listed company is also in the news. Carsales.com has closed a retail shortfall book build under which approximately 3.4 million retail entitlements were offered for sale. And under the book build, approximately 3.4 million retail entitlements were offered for sale. The book build was cleared at a price of $18.60 Australian per new share. The figure represents a discount of approximately 3.1% to the theoretical ex-rights price of $19.20 Australian, as well as a premium of roughly 9.4% to the offer price of $17 Australian per new share. The company has raised approximately 600 million Australian dollars in the entitlement offer, including 172 million Australian dollars from the retail component. And the proceeds are planned to be directed towards the acquisition of a 49% interest in Trader Interactive, which is a leading platform of branded marketplaces in the United States. And CAR expects to close the acquisition in the first quarter of financial year 2022. And it's time for another short break, but I'll be right back after this.
At 𝐊𝐴N TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts. Our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Hi everyone, welcome back. Sage here. You're watching 𝐊𝐚𝐥 TV live from Sydney, and this is the Stocks in Action show. And moving on to the next news. Ares Resources Limited has provided an update on exploration activities at the Constellation deposit. It is located within the company's 100% owned Triton tenement package in New South Wales. Exceptional results have been received from 22 reverse circulation or RC holes, and high-grade copper mineralisation found is thicker than expected and remains open along strike to the south. Approval has also been received for an additional 19 RC holes to continue testing mineralisation along strike. AIS is awaiting approval for a further 21 RC holes. And the next stock to make the news today is Boart Longyear, who is pursuing a comprehensive recapitalisation. It has received consents from the holders of 99.75% of the senior secured notes, or SSN, due December 2022 for amendment to the SSN. And the current rate of interest is 10% on the SSN, and the interest entitlement for those note holders who agreed to be 14.5% for the 30th of June 2021. And as per the announcement, the recapitalisation will permit BLY to incur additional financial indebtedness to satisfy the interest payments due on the 30th of June 2021. And BLY will be able to secure short-term funding of approximately $65 million, ensuring adequate liquidity for operations in the restructuring process. It will be in the form of an incremental short-term $50 million credit facility with Core Partners Management, First Pacific Advisors and Nut Tree Capital Management, giving additional working capital support to BLY, of course. And now let's move on again to the next big news coming in from one of Australia's big four banks. National Australia Bank's business survey has reported another record high in business conditions for the second month in a row, pointing to strong outcomes in the business sector. And the business conditions rose to 37 index points, while business confidence edged 3 points lower to 20 index points. And though business confidence edged lower, it remains elevated after reaching a record high last month. NAB surveyed revealed that forward orders, employment, profitability and trading subcomponents all reset last month's highs, driving trading conditions to exceptional levels. NAB Chief Economist Alan Oster said that the survey results over the past 2 months, when taken together, point to further growth in the economy in the second quarter, following last week's national accounts, which showed the GDP has now risen above its pre-COVID level. He further said that the breadth of the strength in the survey is encouraging, as it points to ongoing recovery in the sectors that continue to lag in the national accounts, as well as further growth in those areas that have already recovered. Thanks so much for joining us on that report, and that is all for now. Please stay tuned with 𝐊𝐚𝐥 TV for more live market updates, and I'll be back shortly with another live expert talk, so please stay tuned.